Hello everyone. My name is Anuj Agrawal, and a lot of our community people and lot of the person who follow our YouTube channel and the other stuff. As you all aware that the how the market is reacting from the past 1 week or so, and there are a lot of chatters about whether in the media or when you are able to understand, you would be knowing that a lot of the macro headwinds are there for India, and that is what they are all giving the rationale for this huge sell-off. So friends, I am not here to create any complexity in our conversation, and I will try to explain in a very very easy and lucid manner. So friends, what happens, like there are lot of investment happens, be it on, if you are a retail investor you do it on your own, or if you are HNI investment you go for portfolio management services, which normally known as PMS services, and the mutual fund schemes and other stuff. So what happens here, uh, there is a cycle for each and every investment. It's not something I mean, any of the investor, either you are directly investing or investing through any of the person, intermediary or broker, etc. So any investment cannot be hold for infinite period of time. So what does it mean? So infinite period of time, it doesn't happen like if you buy something and you keep it as a it will be appreciated, or it will be appreciating in the long run for 1,000% or 2,000%, etc. So there are many expectations whenever the investors are giving their money to somebody or they are investing from their side. So which is called the expected the return from the whatever your amount you're investing. See, other areas, like whenever you're investing the amount, there could be a scenario where you have the money which was not using anywhere, or you will just keep it in the investment, be it an equity, debt, or whatever you're talking. But it doesn't happen always. Like some of the times you will borrow money, or you will get the money from somebody, and you have some limited time horizon, or there are some conditional borrowing. So when I'm saying borrowing, I'm not talking about the borrowed from financial institutions. So if you borrow money from your friends, your whatever, your family or something, or whatever, like for example, you have kept some money for some purpose, and for that purpose would be happening after some period of time, so you have time to you can use that money. So that kind of money also, whenever it uh, comes to the market, what happens, like whenever you are shorting, or whenever you are short out of time, whatever your target was for that money, you will have a scene, like if the market or whatever your investment is not making money or not making your expectations, so probably you will get out, irrespective of the market condition, or irrespective of whatever the future outlook per se. Other condition related to this, like for example, if you have invested 10,000 rupees of money and you want it in the after a month. So for example, at the end of the month the market crashes and you have some 9,000 kind of amount. So you will probably get out of money after booking the loss of 1,000 rupees, because you badly need that 9,000 rupees for your whatever your purpose were. So friends, it's not always like a lot of people comes and ask that why the people will book the losses. So this is something which I try to address those things. So it's not always that you will keep that money for infinite period of time, and always you will have a the objective to get the positive returns. So there are some scenarios where the money is to be used for some other purpose, or it's a just alignment for your asset. So you will be taking out that money from one piece of class of asset to another. Like for example, you will be keep taking out money from equity and keep it in the fixed income security, like for that or FDs or whatever. So, friends, another major thing which we talked about so far, it's related to the very, the general or very retail perspective. So, whenever, like for example, in India market, whenever these things happens or crashes happens, so friends, as you all are aware, it's not something which is a secret that whenever the FII sells, like it makes a huge impact on our market. So friends, a lot of people, ask that, why the FII book the losses and they will run away. So friends, it's not like that, those who deals in the derivative market, they probably know that, the how the FII, take their money from the market after booking the loss, but same time they will have the position in the derivative market. So in this video, I will not be talking about what exactly is the derivative market position for FII or whoever is the big investors, because whenever they want the money to be taken out because of the fear factor, or when whatever, if they want the money to be taken out from the market, so they simultaneously have some hedged position. So they will probably end up making very minimal losses or no losses. And another was like FII will also have a the translation for the currencies uh, amount. So translation from the foreign currency also will make an impact for them to decide, like whenever they want to sell it in the scenario. So coming on to the present thing, then why the sell off happens and all. So as you would notice, or you can go and check the statistics, that there is a cycle for each and every investment, and after that it comes on the almost on the same path, unless there are some actual growth per se, and the other the fundamentals really improves. So if at all fundamentals, when I'm talking about fundamental, I'm assuming that whoever is listening, they are clear about the fundamentals of the any economy or the companies in which you are investing. So you are clear about that. So whenever the fundamentals actually improves, that the value of the security or your investment will improve. Or if at all there is no actual growth or the fundamental growth, then always there is a technical cycle, and always there you have the the upcycle and you have the downside. So today's scenario, why this the too much is selling pressure in there in the market. So this is the majorly on the technical write-off, and plus the lot of the macro the factors which you all are aware, like for example the currency which is all time low, and oil prices, and the other political factors. So friends, I'll be discussing in the very the practical manner in the upcoming videos, for a person to understand as the everybody says in the TV channels also and everywhere, like these factors affects the market. And also, I mean, is there any actual you know the correlation or kind of the sense for everybody to understand that whether these factors really affect the market, if at all you are into the market and you really want to make the money. So friends, so and another one last pointer I just want to add, that why this whenever there is a market is down, then everybody's start saying that the now the stock price of individual companies are dirt cheap. So why the investor are not going and buying the fresh things. So friends, here is a one liner answer is like whenever these things happens, the probably the significant portion of the capital would have been eroded by this sell off. So the people will not have the capital to invest further. So that is what it happens. Even the dirt cheap stocks are available, but the investor or whoever is the person will not be having a capital further to invest into. and another would be the fear factor. So that is what that is what how the stock market works. So there are the very fine observation which I or our team noted. So I'll be happy to share all those for the sake of benefit of the society. And please make a note that this is not something any kind of advisory group or any kind of advisory company would say. It's just for the sake of the benefit of the society. So feel free to send a liner, whatever you feel like, and we'll be happy to share. And I'll be coming live on this YouTube channel, and where you can ask your questions live. So friends, I'll not be able to comment or advise any of the stock specific thing, but I'll be happy to share or happy to guide you in terms of your concept clarity. Like for example, how to read the derivative market, how to go into that, what exactly is to be seen. So it will not be from the academic perspective. It will be purely from the practical perspective, because there are a lot of academic courses are available in which the lot of things are required. But for this juncture, I'll be able to, or I'll be happy to share you with the what exactly is useful in the practical life. And friends, also we are conducting some sessions here in the city of various city of Gujarat and other parts of India also. And these are seminars or workshops are absolutely free. So if you also want to join, you can send an email to us. We'll be happy to take you in. And these are only from the email request basis. So thank you very much.